Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Market Wrap with me, Ryan Huang. And we've got green on the screen as stocks bounce back. And that's rebounding from Friday's sell-off after President Donald Trump said trade relations with China will all be fine. So the Dow Jones Industrial Average rose 1.3% to 46,068 points. The S&P 500 climbed 1.6%, and the Nasdaq Composite was the outperformer, popping 2.2% as beat-down technology stocks led the bounce. The likes of Oracle rallying more than 5%, NVIDIA closing up around 3%. Now let's check in with Mark Newson. He's the Managing Director and Global Head of Technical Strategy for Fundstrat Global Advisors. Mark, good morning. Thanks for joining us today. How are you doing?
Hey, good morning, Ryan. It's great to be back.
Hey, great to have you on the show again. And of course, you track the technicals quite closely. What are you taking away from the latest session? Of course, in the backdrop is how a lot of people are saying it's a taco trade again. Donald Trump has kind of chickened out in terms of his threats when it comes to tariffs.
Well, I would just say that it's important for markets to realize that it's always difficult to make really head or tails of what's being said, because that rarely translates into the actual action for the economy and for markets. And so yet again, markets appear to have been caught off sides, but it's just important to follow trends. We did see, obviously a big down day on Friday, and that was recouped as of today, coupled with the fact that, of course, yet again, we have another great AI deal being announced with OpenAI and Broadcom. So I think that two things are interesting. One is that technology is continuing to lead the rally, despite the fact that many sectors are not participating. But until that ends, it's very difficult to fight the overall uptrend that remains very much in place.
Yeah, let's talk about these trends. And you mentioned the OpenAI deal with Broadcom. That saw Broadcom's shares surging almost 10%. Their partnership becoming official on Monday. How much more upside are you seeing in the semi space? Is it still Max 7 when it comes to what's playing out in AI?
It's certainly getting very stretched, but that's never really been a reason to avoid owning a sector or stock or really selling it only because it's overbought. You really need to see evidence of that trend breaking. And for now, the trade is very much in place. I think there's a good likelihood that SMH, rallies up to levels right near 360 to 370 over the next 2 or 3 weeks. Interesting to me that I think markets have largely avoided a lot of the poor performance that normally happens during the fall period, August, September. And, now we're in the middle of October, and we're seeing a little bit of a different market. The dollar is at new 2-month highs. We're seeing breadth has deteriorated. We're seeing huge positioning and sentiment increases in the market in the last few weeks. So for me, that is a little bit of a worry. That means that things have been changing and are a little bit different, despite the fact that its trends continue to go up. So I'm seeing probably an above-average chance of some cross-market volatility between now and the middle part of November that have little to do with the administration, but really more to do with the fact that breadth has been largely going lower over the last few months. Very few sectors are keeping up with technology. And for people that study the S&P and the QQQ, that looks still quite resilient, but the broader market has largely gone nowhere since July. And that has to change, I think, before we can really see that markets are going to just continue up through fourth quarter with no interruption. Difficult for me to see that. Hopefully we can get some answers with financials and the bank earnings that are coming later this week.
Yeah, so from tech, let's jump to financials, where we've got earnings season kicking off with the likes of Amex, Wells Fargo, Bank of America, Citigroup, the usual bunch that typically kicks the earnings season off. And what are some of the trends you'll be watching out for this time?
Well, I think financials have been under a little bit of pressure in recent months. It's interesting that we have seen some underperformance, but only mildly so. And the sector still looks very appealing to me, but I think as a way to play it, I think you really have to still favor the broker-dealers, exchanges. IAI, it still looks to be a better trade than many of the commercial banks and really owning the KBE ETF. And so, I would also mention that the KRE, the regional banks, has not really started to outperform dramatically as might be expected. And everybody's watching small caps very closely. which have done well in recent months, but it hasn't translated into the small caps within the financials really outperforming. So, I think you stick with what's working in that case, looking at the larger investment brokers, investment banks, those kind of stocks, exchange stocks are going to be better, I think, for investors than owning really the regional banks for the time being.
Yeah, to that end, the larger banks could benefit as well from the growing M&A scene. We've been seeing more IPOs, more M&As and so on. How do you square that with what's going on with the larger, broader economy where there is still so much uncertainty, where you've got tariffs still going on, even uncertainty around the broader economic outlook?
Yeah, it's a great question. I don't know if there's an easy answer for that. I think that the economy still seems to be attacked, even though there's some minor weakness in the labor market. Earnings have been very, very good. I think the entire globe has been wondering about tariffs for months, but it's never been something that investors should pay attention to because it hasn't affected the stock market. And I sense it's created a wall of worry, and stocks have been able to rally through that. That does seem to be changing. Sentiment has gotten more optimistic. As you mentioned, the IPOs are now starting to increase. A lot of the deals, that's interesting to me. We're also seeing some evidence of some weakness in some of the leveraged loans, and junk yields are starting to gradually widen out a little bit. That's one area that's a little bit of a warning sign for me over the next year. I think we have to watch that very carefully.
All right. Also watching very closely what's playing out in terms of the energy space, particularly oil prices. Now, with what's going on as well, what are you expecting in terms of the market action there?
Yeah, I'm still pretty negative on energy. I think that's probably a 2026 investment more so than 2025. I mean, the administration still has plans or hopes, I guess, that crude oil is going to sell off and pull back to the low 50s, which would be very helpful for inflation. Of course, we know that under $64 a barrel, that makes it very difficult to make money for many of these companies. But, Saudi Arabia seems to be on board with what the U.S. has discussed, and I think in general, crude is going to pull back very sharply over the next few months, and that should make it very difficult. So energy is an area I would avoid from an investment perspective, but I think it will bring good news with regards to the inflation picture. All
right, from one commodity, let's take a quick look at another one, which is gold, and there's been a pretty good run up. Almost 56% year to date. It's broken above $4,100 per ounce. Where are you seeing in terms of gold prices and where it's hit the tentacles?
Yeah, it's been a remarkable parabolic rally. I've been really talking to investors about holding off on initiating new long trades in gold. I think it's gotten very, very stretched. Gold has an RSI, a relative strength index, of about 90 on a monthly basis. Silver actually has been up over 80%. We're seeing now signs of supply shortages and, very interesting, the dynamics right now with the precious metals. But people seem to be very, very enthusiastic about the metals. And a lot of my cycles start to turn down in the latter part of October. So I think it's probably a little late in the game for new investors into the precious metals. But I still think it makes great sense for those to at least own silver, which I think will actually act much better than gold over the next 12 months.
All right, perhaps silver, a better attractive look at where things are right now in terms of valuations and where things are in terms of indications on technical levels. We've been in conversation with Mark Newton. He is a chartered market technician and managing director and global head of technical strategy for Fundstrat Global Advisors. Mark, thank you so much for your time and insights as always, and have a great week ahead.
Yeah, thanks, Ryan.
All right, catch up again next time.
Take care.
Stay with us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.
Money FM 89.3.